And we're live and back with another episode of the Download with Joe. Thanks to all that are slowly but surely starting to tune in. Whilst we get a few who are going to join us live, let's do a quick reintroduction as it's been, 3 months since we started this, Joe?
Yeah.
Let's provide some context. So, Joe, feel free to introduce yourself.
Yeah. Thanks, Lewis. Good to be here. Joe Amador. So I focus on product and market. I'm a consultant focusing on product and market strategy for technologies that I would say fit into the buckets of decarbonizing or digitizing real estate. So smart buildings, energy management software, HVAC optimization, analytical systems. That's kind of my world in general. Background at Johnson Controls and then at Lucid before they were bought by Acuity. And the types of projects I take on are either fractional product roles with small vendors, sometimes product advisory roles with larger vendors, and then a lot of diligence with investors where they're looking at a company in that market, that category, and want some outside expertise. Have a newsletter, which to some degree is the basis of some of what we talk about. Keep a pretty wide network of owners and operators and vendors, much like you, right? The network's kind of the lifeblood of your business.
Yeah, it has to be. Well, appreciate that. And yeah, this series, whether this is the first episode you've tuned into or you've tuned into a few, has come off the back of really emphasizing some of the great work that Joe does with his newsletter, which is now bi-weekly. So check that out.
Yeah.
I'll put the link in the show notes.
Yeah, it's on Substack, and yeah, we split it up because it was just getting so long, and I felt like more touch points, more times for people to read it. But you can go back to all the old episodes, much like on YouTube, we have all of our old episodes too.
True. And I'm Lewis, founder of LMC, which is a talent solutions business dedicated to supporting climate technology business through go-to-market expansion. Enough about us. We like to keep either things pretty, not necessarily short and sweet, but we like to be tuned in and focused on specific topics, and each week have various topics. Today is talking about some of the product launches that we've both seen across the space over the last few weeks. This should be a pretty cool episode because we can almost split them into categories. You'll see throughout. So
yeah,
let's get stuck into it. So there's obviously a lot of focus across ESG right now, Joe, and real estate is, depends who you speak to, but is reeling or starting to see some good upturn. So product launches across ESG space is, I would say, pretty timely. And we've spoken about Measurable quite a lot, just by chance with some of the stuff that they've done in terms of product launches, as well as also in partnerships. And they've just launched a new tool. So talk us through that one.
Yeah. So, Measurable is an interesting one. They're kind of an ESG data management business. They've launched something they're calling benchmarks, and it's where they've been moving in general. So you think about, I'm an owner of real estate. I have a lot of reporting. There's GRESB, there's maybe SASB, there's individual standards, regulations, rules in different regions. And so you need a data platform, or really just a system of record to manage those data, to validate those data. There are third-party assurance providers that might review your data, almost like an audit. They usually call it assurance, but it's similar to an audit. So that's Measurable has a platform that really supports that end-to-end. Where they've been going is, can we use the market level data for various use cases? And so benchmarks, and also they announced a partnership with with FTSE. The idea is we have data not just for an individual building or an individual owner's portfolio, but we now have this kind of corpus of data where we can say, this is the performance of buildings, this is the status of buildings, this is, and that's the direction they've been taking for a while. And I think that these were two kind of relevant announcements to that. So You can compare different buildings, you can compare different portfolios, you can make comparisons, or you as an owner can probably, beyond just what you got from Energy Star, which is a nice benchmarking tool, you can start looking at, well, how are we doing? And I think if you asked Measurable, they would probably say, well, since we've been building these capabilities and have grown to this level, we now have data at the market level that's significant enough to matter in the eyes of, because if you had 5 customers, having a benchmark between the 5 customers, you could argue, well, are these the poor performing customers? Are these the strongly performing customers? It's unclear. We're not sure. So that's where they've been going. Some of it they say is very much investment decision based, right? Like this is now an investment decision tool for somebody who's looking at, well, do I want to invest in this fund? How is this fund doing from a sustainability point of view? Obviously, they're already making decisions. Do we want to invest in a new fund with a firm that has a track record around the financial return? Maybe they're now saying, well, we also want to know what's the environmental return or sustainability return if we invest in this fund. So it's an interesting direction. I would say the last thing I'll say, we can talk about it, of course. I don't know that I've seen a lot of other companies that are going this direction. I haven't run all the numbers. Not all the numbers are actually in the market, but I think you probably have more scale from Measurable than from a lot of peers, which may be why they're the first mover here. And the data we have has market benefits beyond just individual user benefits.
I think that's fair. I mean, again, I think Measurable is arguably one of the largest ESG firms, or one of.
Yeah, I think so. I try to track this as well as I can. I mean, sometimes it comes up for client engagements, as you would imagine. Just not so much we want to know all the sizes of the firms, more we want to know how big could this firm actually get. And then the other side, this firm that's smaller says this is their SAM, their serviceable addressable market. Is that realistic? And sometimes the answer is, well, sure, maybe, but they would have to take a lot of business, like conquest sales versus blue ocean sales, just very, very different in levels of difficulty there. So, but I think they're the biggest, or one of the biggest, yeah.
Definitely. Moving on from ESG, what we would class as traditional controls or equipment OEMs, Schneider and also Siemens have done or have released. Would you say that it's relatively similar? I mean, it's around decarbonization, which is an interesting trend with large companies like this now targeting that specific either keyword or focus of the business.
So there's a lot going on in this, I guess this category. I would say, just to step back, Schneider Electric launched what they're calling the Building Decarbonization Calculator. And the idea there is help an owner or operator, but somebody who is in the building, help them figure out what are the ECMs. ECM is an energy conservation measure. They actually, interestingly, were using the acronym ECCM, energy and carbon conservation measure. The idea is a retrofit measure or a retrofit activity or action. That could be replace the HVAC with a heat pump. That could be replace the, if you had fluorescent lighting, replace it with LEDs. Those are individual measures, almost like ingredients of a recipe. And the recipe is, we're going to reduce the emissions of the building and the energy of the building by 10%. So that's the outcome. So they basically say they have a calculator that can help you do this as the owner. And then what Siemens announced was, they say it's a free cloud-based tool to help decarbonize commercial and industrial facilities. So they said tool, not calculator, from Siemens, but my sense is, and it was Siemens, technically Siemens Financial Services. So there's, interestingly, a lot of ROI decisions to be made here, because you have to put capital in. You get, I upgrade a bunch of equipment. There's a capital expenditure. Over the next 5, 10, 15 years, I will see a reduction in energy, and that will pay back whatever I have invested up front. And then the next layer, a lot of these companies, including Schneider and Siemens, will help you finance those retrofits, right? So maybe you don't have to put any money in up front. Instead, you can go to a Siemens or a Schneider, or maybe they have a provider, a partner that provides the capital, and then they're doing all the work. You can sometimes have a guarantee there where we guarantee you will save at least as much. If you save more, we'll split the additional savings. If you save less, we'll cover whatever that gap is, that difference. So my sense for both of these is that this is the almost think of it as like the top of the funnel. We just want more people to realize how much opportunity is there for them to decarbonize their buildings or reduce the energy and decarbonize. Those go obviously hand in hand. And so the idea is, well, let's just give you maybe not based on an audit because we haven't yet done an audit of your building or even anything close to an audit. Let's just give you a sense of, oh, you still have, your chillers are 15 years old and this is how much maintenance there is. There are opportunities to replace your chillers. And you might think, oh, I'm a school district. We don't really have this budgeted for the next 5 years. Where do I get the money from? I guess if you're a school district, maybe you can get a bond passed, but like it has to be on an election cycle. If you thought of this today, it's probably not going to be on the ballot next week, right? And so 2 years from now, maybe that's where you're planning. So there's a lot of ways that you can do this. My sense for both of these was that both companies seem to be focused on, it's not just about energy savings, it's also about decarbonization or carbon reduction. And two, maybe there's a hesitancy to call somebody to bring them in to do an audit, even if one of these firms would say, hey, we can do a base level 1-day audit for free, and then we'll give you a report, we'll tell you what we can do. Maybe doing it online, you can kind of figure out, well, what are the real opportunities here? Like, what really could I save? And maybe it's not precise and accurate, but it's directionally accurate. More broadly, the last thing I was going to say, this is an interesting topic, so obviously we can talk more, but I wrote an article in my newsletter back, I think it was June, July, called Enterprise Decarbonization Analytics Solutions. And it was a bit of market analysis. And there's a lot happening there we're focused on solar opportunity, right? Solar obviously has a decarbonization angle and energy reduction angle, but it's one of many ECMs or measures you could take. So there's some solutions there. There's some that are at the front of the life cycle. Let's just do an assessment, like a market viability assessment across your portfolio. Where could you think about solar? Where should you not at all think about solar? And there's others that kind of help you procure. And then there's others that actually, we are the tool you can use day to day or week to week to manage this process so that in 30 years or 20 years, when you want to get to net zero, you've actually achieved it. It's not just 20 years from now, we're going to be at net zero. Today, I'm not sure. That's probably a recipe for not success or a lack of success. So there's actually a lot happening there. I think I've seen a lot of interest from a lot of different types of companies, but the OEMs obviously are right in the center of being interested here because they're going to Wall Street and saying we're a decarbonization innovator. A lot of them are, at least. And then the other side is they make the equipment, they have the services, they have the trucks, they have all the capabilities, and they're already doing performance contracting fairly widely across the country, which is similar to what we're talking about here.
Because of the energy conservation measures, how that's tied in. Yeah,
I mean, an ESCO or an energy services company or energy services contract or an energy performance contract, they can all be used kind of similarly. The whole goal there, I mean, they started really where you as an entity like a school district or a city didn't have the money to upgrade your building systems, but there was a energy savings opportunity if you did. So kind of finding this balance between, well, you as the city don't have the money to replace all your chillers and your controls, but if you did, you'd get a 10% or more energy savings. And so a JCI or a Schneider or a Siemens would come along and say, we can guarantee that the contract, is maybe a couple decades, but over that time, you'll get what you want. We'll ensure the operational efficacy of the equipment, and we'll just get paid back on the savings. So that energy performance contracting model, a couple decades old at this point, has certainly changed. The market has changed. There's a lot of new entrants. I would say that was a very standard sales process. We have an RFP to do an energy performance contract. We get bids. Now I think companies are thinking, well, there's different pools of capital, some of them shorter term, some of them longer term, some of them focused on operational measures versus replace all your equipment. And so you've seen a huge growth in some of the companies we've talked about. You see a huge growth. But yeah, I see these tools as being almost at the top of the funnel of we want to build out more leads, raise awareness. Firms that might not have thought they're in a good position for a performance contract or an energy services contract, actually maybe they are.
Yeah, and I imagine the most audience would know that anyway. But if you simplify it down, I guess it's the pre-check to see whether you could get a mortgage on a house. Those kind.
Yeah. Pre-qualification is a common thing in America. You have to provide some information. It's a lot easier though than getting qualified. Like to actually get qualified for the mortgage. Yeah, it's absolutely right. Yeah. I mean, when we bought our house, obviously it was like wait, you need what information? And like, wow, like that's, I didn't,
It's tough.
I work for myself, so obviously it adds a lot of complexity.
Yeah.
But
And then I know that we're tying in product today, and there's still
yeah,
a couple more to discuss. But just
yeah,
on the OEM
yeah,
side, you mentioned earlier when we were doing our planning, Eco Energy Insights have rebranded into Carrier Brand, Abound.
yes.
Is that just to keep everything slick, or do you see that being a different play?
Yeah. So I guess backstory. So Eco Energy or Eco Energy Insights was acquired a handful of years ago by Carrier. I think it was from maybe from Infosys. It was from an Indian kind of business process operations or outsourcing and operations company. And where they really fit was for multi-site enterprises. So think restaurant, retail. We have 500, 1,000 of this building that really, if you went to one and you like took a blindfold off, you wouldn't know, are you in North Carolina or Michigan or California? And so they do a lot of the kind of operational pieces, but a lot of it was some tech enablement, but also a lot of people, right? So we're monitoring meters, we're monitoring energy, and we're able to give you some high level reports. So there's a lot of different businesses that go there. So Carrier bought this business, and for a while it was just an independent entity. There's definitely some overlap, right? Because those buildings likely would have rooftop units on the roof, and Carrier is number one in rooftop units in America.
Mm-hmm.
I don't know that I saw a huge amount of overlap on cross selling, but there are clearly the opportunities. So they've rebranded that business. So it's very much a tech-enabled services business. It had grown nicely even without Carrier. Carrier bought the business. But Carrier also has this platform, Abound. And Abound is really their digital platform, if you will. And all the companies, or almost all of the companies in their space, have a digital platform. Carrier, I will say, if you look, and I cover this a little bit in my newsletter, in their annual reports or their quarterly reports even, they talk a lot about growth in Abound from connected chiller services agreements, right? We can sell kind of a higher tier of chiller service through a digital platform. A lot of just information, data. We use it if we're servicing your building. You can use it just to have better insight of what's happening in your building. So they're rebranding. So at this point, the press release didn't say much about we're bringing all the platforms together, and maybe that's not necessary because there's a lot of different use cases. But they are putting everything that is digital into a category or a brand called Abound, and that makes sense. I think all of these companies are trying to show that one, there's opportunities for recurring revenue. Two, we're investing in technology, and being able to pull it together under one brand probably just makes it easier to understand. As anyone who's buying from or investing in Carrier.
You make it easy to understand, so hopefully everyone else who's tempted in buying the product does. Would have been good to ask Mead Russo about any up and coming product launches when we had him on the live a few weeks ago.
I guess we can integrate that and like, hey, do you have any other product launches you want to discuss?
Inside knowledge.
Soon we'll be where they break it. They break the news.
Yeah. Okay. Interesting. Now moving on to space utilization, and I think with any episodes that we've done, there tends to be a theme or a follow on. It's product launch, or it's then fundraising, vice versa.
Yeah.
And there does seem to be quite a lot happening in the space utilization space, which I guess a year or two ago we may have thought was a little bit saturated, but companies are having to innovate to stay relevant, to increase the chance of market share and wallet spend. So walk us through both density and also VergeSense.
Yeah. No, absolutely. So two different announcements. VergeSense and Density, I would say, are two of the longest standing space utilization companies. For those who are new to watching, listening to us, so space utilization, you could almost argue it's its own tech stack. It could be its own category of a tech stack, right? You have hardware sensors, you have firmware and kind of data middleware underneath, and then you have data and analysis, usually delivered through software that is providing information to somebody in workplace, in real estate, in facilities that otherwise doesn't have it. And the main data set that they're providing is where are people, what is being used, how is it being used throughout a building or a portfolio, and this has all kinds of implications. A lot of these companies became, or their initial launch in the market was before the pandemic, and there you had challenges like not enough conference room space, but just overcrowding generally in the office, you could say is more generally. And then even things like I have employees who are trying to find where they're going and they can't, they're new in this office or they're coming to an office. Access control is a little bit different, but that's kind of a related issue, right? I want all of my employees to be able to get into any office around the world with their phone or with their badge. And there's a lot of infrastructure required to make that happen. So when you go back to space utilization, after the pandemic, you found obviously a lot of people not going to the office. And then as they came back to the office, there's a move for hot desking or just not permanent offices, right? Or desks, right? You just find your desk. And so how do you enable that? Well, one way is to figure out, is there anyone working in this space or not? Has it been reserved is a different question than is anyone actually there? Because oftentimes you might reserve a desk, something comes up, you're not there. So these companies, I would say, have it's been a bit of a rocky road as you walk through, and most of the use cases are offices versus other types of asset classes. And the technology would be different if you were working in retail or, I guess a restaurant business. So most of these companies we're talking about, they're office focused. So that's been a difficult place to sell anyway. So that's a very quick, where did this market come from? Where is it going? The other thing I'll note is the hardware. If you actually dig into hardware for my office, there are different fundamental ways of monitoring people: cameras, LiDAR, passive infrared. There's a few others out there, and they all have different pros and cons. You also have, is it a battery-powered sensor? Is it a plug-in sensor? So a whole host of what's the range, right? If I have a lot of open office space, you want a wide range because you want to be able to have as few sensors as possible. But if you have a lot of little conference rooms or those little phone booth style desks, there maybe you want to know, is anyone in the phone booth, but you can't get a sensor that's going to go through the walls, at least that I've seen yet. Maybe that's to come, that can say all 5 of these phone booths, like they're occupied or not. I mean, maybe you could put something outside of them and figure out, is anyone going in or not? But so there's a whole, if you're actually out there, you're watching this and you're a buyer of these technologies, there's a lot to unpack of what are you looking for. So anyway, that's like this market in a nutshell. As it relates to VergeSense, they have a range of different sensors for different use cases. From, I want to track the desk, I want to see somebody working at this desk, and they have that capability. But then there's also, is anyone coming into the space or going out of the space? That's also one where some owners of real estate or operators have said, I don't need to track where people are in my space. Like, are you over here? Are you over there? Are you over, against that wall, against the windows? But I do want the ability to figure out how many people have come into my suite or gone out. And I overall can just see 3 people came in today and it has room for 50. 3 people came in the next day and it has room for 50. That tells me very low utilization. Then the other side is, well, I have 50 offices. I don't necessarily need to look and monitor each desk. I just want to know across my portfolio how many people are coming in, what's the opportunity, when am I busy, when am I not, how much space or how many more people could I fit into the space. And so VergeSense's actual product launch, now we're finally getting to the meat and the potatoes, at least for this. They launched just a next generation software platform. So there's innovation on the hardware side, there's innovation on the software side. I would say kind of the analytics in between, there's definitely innovation on, we can figure out is somebody here or not based on some information we're collecting. And then when you see in our software, it will be a little bit more accurate. So there's innovation happening. But VergeSense offered I'll stop here. We can talk a little bit and then I'll go to density. But VergeSense is basically continuing to invest. And I've seen them maybe a little bit more investing in the software than in the hardware. So the idea there is, we have the data. We want to make it easier for you to use it as workplace, real estate, facility staff. And again, you can imagine there's a whole host of use cases that they could support, even down to directing facility management labor, right? The custodians don't have to clean this bathroom because no one's been on this floor today. And we know that through data.
Yeah, and I was going to say, just before we touch on density, I'll put my neck on the line and say I think space utilization, like the market in general, is going to boom. And the reason for that, if you remember pre-COVID, there were still quite a few companies entering or well advanced in space utilization, but a lot of these real estate owners or occupiers had full 5-day work weeks in office. So you kind of
Yeah.
knew where your employees were and which spaces were being used, whereas COVID really advanced both the innovation, adoption, but also like how this
Yeah.
technology is being used. And I think with this huge, and I think we need to have someone on to discuss this,
Yeah.
but with this work from home, hybrids, in office debate, which is
Yeah.
almost political at this stage,
Yeah. Yeah.
it's these updates compared to perhaps 2 years ago or just after COVID started to die down are so much more interesting and relevant as well.
Yeah. 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 I mean, there's the political debate, return to office or not. I monitor that. I put some news in my newsletter. I used to put more news because I think a lot of companies viewed that as, I can forecast my next quarter based on how many people are going back to the office or not. And there's definitely some companies that have office demand indicators. Then the step below is, what data do I need? What technology do I need to enable the collection of those data streams? And how does that change how I operate my facility? And that's where I think there's more discussion to be had. I agree with you, though. We could probably find some owners and operators or workplace facility staff who can just say, this has been my journey. This is how I've gone through things. And maybe that includes procurement of technology, but even a broader discussion of that. I can tell you, I think it was at NexusCon, I was talking to somebody in this category. I forget who said, if we brought everyone back every day, we would not have enough space. Like, we just would not have enough space. Even with hot desks, which typically you can fit more people into a space, a given workspace, is just say we. So luckily, we're not doing that, because I don't know. Like, we would actually just need to go lease a bunch of space. And I thought that was interesting.
Well, again, put my neck on the line. Won't say who the company
Yeah.
is, but there is a large tech company who have recently announced a pretty aggressive return
Yeah.
to office mandate, and there's rumours that they don't have enough office space in London to be able to have all their employees homed.
Yeah.
So
Yeah.
I'm sure
Yeah.
anyone who's listening may be able to guess who that is. So
Yeah.
I
Yeah.
also
And
think
I've
that
seen news. Yeah. Yeah. Earlier this week, I was at an event for a day, and I ran into an old colleague from like 15 years ago, right? Like, first job out of college. She still works there. And it was interesting because, she was telling me, oh yeah, we shut down this office. And again, it's been 15 years. So, but like, there was an office that was always like the nicest office. Everyone wanted to work there. There was never enough space. She said, yeah, we just shut it down because no one was ever coming in. So we opened up this like other little meeting room space. And like, I work out of this office, but I don't really have to go in very much because my team is all around the country. And I think there's a lot of nuance to that debate of come into the office or not. I think if you're also a bigger company versus a smaller company being all together, it just, there's not a one size fits all here. The sensor companies, they would probably say, regardless of what your setup is, we can give you some data that will help you improve things. So,
of course they're going to say that.
Yeah.
Um,
Yeah.
Well,
touche. That's good. Yeah.
That's
Yeah.
all we've got time for, I'm afraid. But
yeah. Do you want to finish up on density real quick?
Oh yes, sorry.
Yeah. So they introduced, so density, I would say, of all of these companies has probably the best go-to market, the best marketing. They've been a little quiet recently, but they are, of all these companies, I think their last round, they actually achieved unicorn status. And I don't know of any other company that has at least announced in this space where unicorn. We did talk about Butler just raised a big round earlier in the year. Contact.io, contact with K's instead of C's, raised. Both of them talked a lot about healthcare as a use case, or just generally health aged care centers. But Density launched what they're calling the waffle. That's a hardware product. And the idea is a small little device. You can put it in a room and it will count. It'll do people counting, right? When you think people count, that's a way of using space utilization. You sometimes you can count. There are 3 people versus 2. Other solutions just say there are people here, there are not. But they introduced the waffle, very small. I mean, I've seen photos, but we're talking, this big. You can put it on next to a TV. You can put it in the middle of a desk, or not in the middle of a conference room table, and it's just giving you count. And it's interesting. They talk a lot about the price, the ease to implement. Those are some of the pain points you hear from interested buyers who don't end up buying. they say, oh, I had to buy a lot of the sensors, and they're mounted on a wall or in a ceiling, and you had to wire it, and that means I have to get electricians, and that is expensive. And before you know it, you're spending a lot more money than you want. This is a little bit more, I buy the device, just like setting up a TV, right? Like I put it on the bench, I plug it in, we're good to go. And it's very new. I think they're just taking orders, so there's not a lot of these out in the field, but they're definitely going down the path of we're innovating on the hardware side. And I've heard positive things where this does seem to solve some of the problems that you could have. At the same time, hardware, even inexpensive hardware, it will add up when you're putting one in every single conference room or
100%.
every single room. So there's still the ROI question to be had.
Yeah, I couldn't agree more. And just final point on the debate, the work from home hybrid in office debate.
Yeah.
I think Dentsu have just released, I think it was a couple of months ago now, but I saw a post from Andrew, the founder and CEO, I believe, talking about bringing as many individuals back to California and having an in-office culture. So we'll see, but definitely a space to keep an eye on. I for sure am.
Yeah. I'm seeing more of the push to come back to the office from the smaller companies than the bigger companies. But it varies. It's not like if you're small, you want people in the office. If you're big, you don't. But I'm seeing a little bit more. And I'm seeing it also from investors. So I think some of it is the investors in the companies say, hey, like you're moving slow. We need to like accelerate. People should be in the office more. Or it could just be every month you all get together.
We should definitely have a guest on. I mean, my initial stance or my overview stance is everyone has their own policy, both from a company standpoint and individually.
Yeah.
Just find your lane. It doesn't matter if someone's working 5 days a week in office or someone's doing 2 days, Monday, Tuesday, then Thursday, Friday. That might be working for them. You don't have to work for them. There's definitely other companies out there, and there's other individuals out there. So
I agree. This would be a really fun topic to unpack, and maybe anyone who's watching or watches this, we'd love suggestions, and also when we post this on LinkedIn, we can just kind of have an open call, kind of a workplace leader that has a lot of thoughts around how to navigate these waters, the technology, and how that fits in. So it'd be great.
Cool. Joe, as always, appreciate your time. Another as always, enjoyable episode. We'll see everyone next week for another episode of Download with Joe.
And, I think we have an interview, so we'll announce later, but I think we have a special guest. So
we do. All right, guys.
Yeah, and happy Halloween to everyone in America, or actually everyone everywhere, but
and the UK.
Yeah. Oh yeah, that's true. Yeah, I had a late flight last night and I got woken up by a snow leopard. It was my daughter dressed as a snow leopard, but it's quite scary. It woke me up though. I was ready for the podcast because usually snow leopards don't wake me up, and maybe it's a bear, but So
another coffee. Go check out that snow leopard.
Yeah. Thanks all. Thanks, Lewis.